as your Invest Insight expert, I want to introduce you to YMAX, an option income ETF that could add an interesting dynamic to your portfolio. But what exactly is an option income ETF? Simply put, these funds generate income by using option strategies like selling covered calls. This approach allows investors to potentially enhance returns, but it's not without risk. Much like placing a bet at the casino, you could see significant rewards, but the downside can be just as steep. So if you're considering YMAX, make sure it aligns with your risk tolerance and long-term goals. Today, our topic is on covered call. But before diving in, I want to express my gratitude for having you with me on this journey. So what is a covered call option? It's very similar to the call option strategy I covered in another video. If you haven't watched that one yet, I highly recommend checking it out. Now, let's talk about the covered call strategy. A covered call is when an investor owns at least 100 shares of a stock and sells a call option on those shares. This strategy aims to generate income through the option premium while limiting the stock's potential upside. If the stock price remains below the strike price, the investor keeps both the shares and the premium. However, if the stock price rises above the strike price, the option buyer can exercise their right to buy the stock, requiring the investor to sell it at the strike price. Let's put this in real-life scenarios. Let's say you own 100 shares of Tesla stock at $220 per share. You believe the stock won't rise much in the short term, so you sell a covered call with a strike price of $225 and a premium of $2 per share. If Tesla stock stays below $225 by the option's expiration, you keep your 100 shares and the $200 premium. If Tesla stock rises above $225 to say $230, the option buyer can purchase your shares at $225, meaning you miss out on any gains above that price. But you still keep the premium. Basically, when you sell a covered call, you're not at risk of losing money on the stock itself, but you do limit your potential profit if the stock rises significantly. This concludes today's insights from your Invest Insight expert. As always, it's essential to perform thorough due diligence by reviewing financial reports, news, and dividend histories before making any investment decisions. If you haven't already, you can subscribe to my channel. The Latin word carpe diem means seize the day, a reminder that taking small, consistent steps today can lead to substantial rewards in the future. As always, I wish you continued success and prosperity in all your endeavors.